Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 15th of November. We are quite long in the overnight for Nasdaq futures. After yesterday's rejection of higher pricing, this dot blue line was last week high here. After this rejection, looks like longs, bulls are still in the market. So we are again at that high. High is 11,900 also, almost. So if we check the 1 minute, we've been trending up a lot, holding the 200 moving average, and this was the previous pivot, and we finally broke it, and looks like right now we are still rejecting last week high, but overall Nasdaq is quite strong, rejecting again this level, but is doing a nice trend up, reclaiming yesterday's high. So what about daily? Daily, we are actually doing a bull flag. This is a flag with higher lows pushing the breakout, and I think today we might see 12,000 in the Nasdaq and perhaps pushing 12,100. It all depends on the economic data that is going to be released 1 hour before the open at 8:30. We have PPI, Producer Price Index, month over month, and we are expecting flat or even slightly lower percentage for this month of October. Core PPI flat and year over year decrease of 0.1, 0.2%, and core PPI year over year almost also slightly lower. So this is the key economic data for today, 1 hour before the market opens, and this might have the keys to open the door to 12,000 on the Nasdaq, and also for the S&Ps we have the 4100, sorry. So these levels we are right now trading in this is S&P's futures. We are trading between 3,900 and 4,100, and in the middle we have this 200 moving average. I uploaded a YouTube short this week saying that watch out because we are approaching quite interesting levels in here. So we have this descending resistance, and we also have the 200 moving average in the middle of the range that we are now trying to close. So this was back then at 15th of September, and honestly this is looking good if fundamentals support a bullish move. If we have a nice PPI reading today, we could see a push higher through these moving averages and perhaps reclaiming 4,100 on the S&Ps. And for the Nasdaq, it's also in the same situation. We are more or less trying to reclaim this 12,000 and also this pivot at 12,140. So watch out for that. Nasdaq is weaker than the S&Ps. S&Ps is at this gap in here. So the 200 moving averages in the NQ are way higher, but we are still pushing higher. Both are quite bullish, building momentum to the upside and trying to hold these pivot that are super important for the long-term health of the move. This is for the indices, for the overall markets, and as always we have to check the dollar. Dollar continues moving lower, doing a bear flag, rejecting 107, and we are right now approaching this zone of support. Previous resistance was support back at August. So we are almost at August this year's level. And watch out here, because we have the first of the big moving averages in which I think is converging with this 105, 106 level that I think we might see some kind of support around here, perhaps holding for 107. Dollar is super weak, and I think it's time for a bounce. And we have this technical moving average that honestly we have been holding way lower, far away from the price action since this is 1 year ago, more than 1 year ago, June 2021. So this convergence, this possible bounce on the dollar is at the same time that Nasdaq and S&Ps are trying to reach critical levels. So be careful with those, because right now fundamentals are supporting a move, but technicals are quite tricky. We might find buyers and sellers in these critical levels, and we have to be careful not to FOMO into a move and just wait for confirmation and just wait for the opportunities to present themselves. 2-year yields are pulling back, doing a nice pivot. So this is looking quite good. We came from the highs and we are bouncing between these two levels, 4.2 and 4.4% in the 2-year. And in the 10-year also, this is looking super nice. Look at this. We are bear flagging into the break of the moving average. And this is quite good, to be honest. Next level. So I think these weeks are going to be tested, and most probably we may have a bounce, because this is 3.6% and there's a lot of space down here for a move on the 10-year lower. So yields are looking good, dollar is looking good, weakness across the board, Nasdaq is at critical levels. So we are at the best possible moment for the break of these levels. We just need some economic data, PPI today, retail sales tomorrow, Wednesday, and on Friday, home sales. We just need all these readings to come as expected, and I think we can build momentum to the upside. Stocks, Apple building a nice continuation. It's gapping up 1% already. Microsoft also gapping up. I think all Nasdaq stocks are building momentum to the upside. And let's review the daily, because the daily shows the critical levels that we are and in which we are right now. So this gap is already filled for Apple. So look at this. Apple is at descending resistance at 200 moving average. So be careful, because not only the overall markets, also stocks are at critical levels in which we expect some sort of pullback and perhaps a move higher. For Apple, 160 is the main target, and for this pivot, I think those are quite visual targets, but that means that we have to break this descending resistance that we got since October. For Microsoft, we are at a similar level, and this huge flat top pivot on the daily 250.60, we are also at critical levels. And watch this, we are leaving gaps behind. So be careful, because usually these gaps tend to be tested in the long term. So we could reject this level and fill this gap down here. Microsoft is quite strong also, both Apple and Microsoft. Tesla is on the weaker side. We have 268 as far away, previous support. Also this pivot, it's also acting as a visual resistance. So Tesla is on the weaker side in comparison with Microsoft and Apple, but I think Tesla can build some momentum to at least establish again this pivot from June's. These June's pivots, these two pivots might be reclaimed here. Previous support super choppy, but I think those are quite key for the health of Tesla. Tesla is quite weak due to Elon Musk and Twitter stuff. So be careful with Tesla. Amazon, let me take this. So Amazon, it's leaving behind also gaps, and we have a gap up here at 106. It's right at this pivot, June 2020, that we broke to the downside. I did a video on this breakdown. So this was a series of bad days for Amazon. Remember, Amazon is consumer discretionary, and right now there are a lot of concerns regarding consumer spending and the Christmas holidays. So Amazon is on the weaker side, but at the same time, we want Amazon to be weak. We want consumer spending to be weak. So that's what that means. If you are in Amazon, watch out for a rejection of this 101. We are right now at 99. So a reclaim of $100 a share should be expected, but watch out because we are leaving gaps behind that. Maybe these imbalances need to be corrected. And I think Google's also good. Nvidia is pushing way higher. Look at this. This gap was filled, so we can already remove that and look at the strength of Nvidia. Semiconductors are super hot, but watch out because we are reaching 200 moving average. Semiconductors ETF is also super strong, but again, the same kind of setup. Nvidia is leading the semiconductor strength and move to the upside, but we have this 200 moving average that usually acts as a resistance point, very visual. And energy. So energy, it's rejecting. I was mentioning yesterday that this rejection was nice to see. Remember, energy has a lot of impact, high impact on CPI and inflation. So be careful if energy starts spiking again. We are building nice momentum. This is XLE, Energy Sector Fund. So watch out. I have a video also on this, because if energy continues pushing, we might see a squeeze in here. We are at 2014 levels, so more than 10 years ago. We are reaching crazy levels in energy. Winter is coming in Europe, and I think this might be an issue for future inflation data. Watch out crude oil and natural gas, because both have an impact on CPI inflation. And right now, both crude oil and natural gas are quite weak, but overall energy is super, super strong. So crude oil is also quite strong. I also made a video on this. Look at this, because this breakout started to happen. We rejected one time, but this 92 level, 94, 92 level, if this breaks, we can see 100 again, and this will cause a lot of pain, and inflation will be higher if this happens. So be careful, because inflation is not over. Energy is doing some stuff, some scary stuff to the upside, and don't get too confident. Just wait for your opportunity. In the overall market, we are at critical levels, waiting for new economic data that supports a bullish sentiment. Today, PPI, consumer spending, retail sales. Friday, existing home sales. So be careful, be patient, wait for those economic data and react accordingly. I think this is a good strategy, because these moments of uncertainty are quite dangerous. So be patient and be disciplined, as I always say. So that's all from my side. overall market still pushing. So let's see. We are quite long in the overnight in the pre-markets. This is something I don't usually like because we end up being super extended into the open. We might need a pullback for a healthy move up, but we will see. So right now is very bullish movement. So as always, thank you for your time. If you have any questions, you can comment down below. If you found this video useful, please remember to click the like button and subscribe to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time and see you in a couple of hours with the market update at noon. Remember, discipline and risk management are key for success. Stay safe, everyone.